Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. I see that Russia and Ukraine, I guess the conflict is intensifying. Just to kind of talk about it, give you guys a little bit more information. Looks like the Dow Jones Industrial Average is dropping a good amount, almost 2% lower or so, 550 points. The S&P 500 is following suit. The NASDAQ dropping a little bit more, about 2.5%, 2.2%, somewhere in that range. I'm doing this in the morning of 224. And I'm also seeing that Bitcoin is getting ripped. Bitcoin drops as much as 8%, and other cryptocurrencies tumble after Russia attacks Ukraine. I was looking at gold. Gold is ripping higher, $63 up. Platinum, $30 up. Palladium just ripping it, 9 point something percent. Silver's also doing very well. So obviously our investments in that's going to do quite well. And then oil prices, it's up $7.80 or so. Natural gas is up a lot. Oil's up 8.5%. That's ripping higher. And if you're on the market, you should already be invested in this stuff. War just is going to intensify it for a period of time. The structural underpinnings of the market are supportive of these going higher. So the momentum's been going up, and gold and silver and platinum. Other commodities will probably go higher as well. Anything that Russia touches that people are going to be afraid of are probably going to go higher in price, like nickel and all these other ones, copper. So we should be positioned quite well to ride this through. At the same time, other assets are going to get hit. Stocks. Anything that has an input of energy, an input of commodities is probably not going to do too well. Now, that motion and momentum's already in place. This is just going to intensify the move, in my opinion. And it's showing that Bitcoin and these other cryptocurrencies aren't the safe haven that most people think. If we go into an energy crisis, I don't think Bitcoin and other cryptos that are energy intensive are going to do very well. That's my opinion. I'm not in that camp. Now, we had CDEV that released earnings. Some of these, oil companies are going to start releasing earnings. They are going to do very well. They should do well. It looks like Centennial Resource Development has beaten expectations with their earnings. They're doing a share buyback program of $350 million. They can refinance their debt. They can do a whole bunch of things. They're talking about massive cash flows in comparison to 2020 and 2021 that are coming up in the future. Their hedges are rolling off, which means they are more exposed and will put in place perhaps new hedges if they do to oil prices and natural gas prices that are far higher than where they were before. Their debt, they're paying down their debt. Their debt looks like it's going to be minuscule compared to what it was before in terms of their leverage of debt use. It could be 1.5 times or 1 times cash flow. Everything is looking quite substantially good for all these oil companies, and this is just icing on the cake. And guys, I'm not pro-war. I don't have anything to do with it. I'm just looking at it and kind of reporting on it. Am I going to sell after this news and conflict goes away? No, I'm not. The inventory in oil is messed up. We don't have any of it. Home prices are messed up. We don't have any of it. But it's going to intensify the move for a while. And my opinion is I'm just going to sit on my hands and not do anything. That's what I'm going to do. Do absolutely nothing. And I'm not going to worry about selling. I probably wouldn't be a buyer up here either, though. I wouldn't chase this. So you guys should already be positioned. Should be holding on, ride through it. On the other end or other side, if we get a little bit of a pullback, I would be a buyer again. We are in a 5 to 10 year bull market of commodities. And stuff like this usually happens during a commodity boom. Wars, tensions, problems with currencies. That it almost always is an age of conflict. So this should be expected. All we have to do is ride through it. Ride through it, and it's a pretty easy ride when it goes up. I mean, if it's in your favor, it's pretty easy. But there's going to be a lot of good things coming to those who hold these companies. Good things will come to uranium. Give it time. It's going to be one of the most explosive sectors that we'll ever see. Uranium could produce electricity from a high energy returning source, which is uranium. Nuclear can. And we're going to need that in our future, humans. Advanced societies are going to need it. Not only do they thrive on it, they have to have it. I was reading an article on renewables and their returns of being at 3.5 to 1 energy return on investment, which means you get 3.5 units back for every one that you expend. This is the uptime, or when the wind is blowing and they generate power, or solar when that's blowing, not blowing, when the sun's out. They have so much downtime that their energy returns are very low compared to the energy that's sunk into it, and all the minerals and energy spent to get those minerals and to put in place all of these things. I mean, it takes a lot of energy, and you don't get that much back. Society cannot sustain on that low of return, on a 3.5 to 1. It doesn't work that way. You have to have a whole bunch of spare surplus oil capacity being thrown out. Not oil, energy capacity to do work in society, to resurrect buildings or put buildings in place, or to redo things, to make components of things that are needed, food production. You got to have all that spare energy to do all these things in life, and it doesn't have it. The article that I read, it's by I can't even say his name, Rosenzweig and Goring or whatever. He states that it's 3.5 to 1, and looking at the total amount. If that is true, the biggest squeeze is going to happen in oil and uranium and energy-related stuff, natural gas, coal. We're going to see a massive squeeze because that can't sustain life. And what's going to happen is people are going to realize that. They're going to realize that the renewables, if that's right, I don't know if it's right. He puts a pretty compelling case together. And if he's right, we're going to see a massive squeeze because money's not flowing into oil investment money in the quantities that are needed. So we're going to end up with a shortage. And we've never had a shortage in oil before. We've never got through where the demand is greater than the pumping capacity of the world. We've always had extra spare capacity somewhere in the system. Now, this time is different. And I'm not saying that it's different in terms of I mean, that's like the worst words, but to use, because people say, well, it's not that you're saying that this time's different. Well, what I'm saying is we've never exceeded the supply, our demand. And that could happen fourth quarter of this year, first quarter of 2023, somewhere in that range. If that happens, I don't know what that does to price. But you know what? I'm going to be invested. I'm going to find out what's going to happen. And if we have other things that are going to take supply offline, war or whatever, it's just going to help. It's going to be a tailwind for our investments in these energy sector. Energy is the big one. I think precious metals will do incredibly well because they account for how much money's been in the system. If we have energy problems to the extent that they say we are, currencies could have problems and we could see shortages. And I'm just trying to stack all this up, guys. I'm looking at a lot of the supply-demand balances and deficits that are running in a whole bunch of different minerals that are coming in a year or 2 or 3 years. It's right in front of us. Think about things that you need, that you might need now, and buy it. Spare parts, capacity, spare things. I think we're going to see shortages in a whole bunch of different things. Aluminum, steel, iron, copper, nickel. I mean, it's going on and on. So I think companies are going to struggle. You're going to see supply chain shortages of a whole bunch of different things. I'm seeing supply chain shortages in lumber, difficult to complete homes. So we could see our new home starts peter out and go flat or come down a little bit. And the housing the house builders have some problems, not because of demand, but because of the supply. And we could see that happen with a whole bunch of different things. The supply of things that start to become a lot less. And, they're going to start blaming stuff on this war. They're going to blame a whole bunch of things on it. Supply chain shortages. It's coming no matter what. They're just going to use this as an excuse. So get your stocks that you like. I don't know if I'd get it at this second because we're probably going to see a massive move in this. But hold on. Hold on through this stuff. Even if it comes back down, I'm still holding on. I don't see a reason to sell it. The inventories are too low. And this is just going to amplify. If it has any problems, it'll amplify the problem. I see Brent crude's $105 and WTI crude's almost $100. So if you guys like the content, give me a thumbs up, subscribe to the channel if you haven't, and thank you for listening. This is Finding Value.